Let me quickly talk to you about Motley Fool versus Zacks versus Morningstar versus Seeking Alpha versus The Street. Which is the best stock advisor? Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sort of Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous if you're to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about Motley Fool versus Zacks versus Morningstar versus Seeking Alpha versus The Street. I want to do a quick compare and contrast here. So, investing your money wisely takes a great deal of ongoing research, right? That's for sure. And with hundreds of financial websites at your fingertips, where do you actually start? The thing is, if you are a serious investor, free advice only goes but so far. So we've chosen some of the best investment advice websites that won't cost you an arm and a leg, so you can actually focus on investing your hard-earned dollars. The thing here is that it's kind of tricky because investors need to understand the product that is most suited to their investing style, risk tolerance, and budget. So as an investor, you got to think about this trifecta. What is your investing style? What is your risk tolerance? And what is your budget? Some investors are pure numbers players. Others connect dots around the world to come to a decision, while many are on the lookout for the next big idea. So you got to really put yourself in the right category here. Individual stock picking requires considerable analysis. I'm not talking up here about going on forums and going on online and looking for, no. You got to do some analysis, fundamental analysis and technical analysis. And early investors who are starting out their journey are better off considering passive investments and low-cost index funds instead of researching and buying stocks on their own. So in today's show, we actually have put together the best stock advisors where you can get news and data on companies, the economy, and the market. So if you do your own research on stocks, mutual funds, or ETFs, you know the importance of having access to data. And it's very important that most of us wear two hats, trader and investor. And some of the investment advice providers on our list today seem to have chosen the hat they want to serve. So, for example, let me give you an example. Zacks has Zacks Momentum Trader and Zacks Trade, whose names underscore the firm's increasing focus on traders. Meanwhile, Chicago neighbor Morningstar continues to sharpen its long view on stocks, funds, ETFs by having full-scale iPad apps for its newsletter subscriptions. Before we get into the nitty-gritty, check out this short video. It tells you about our investment research service evaluation approach. We do have a methodical process when it comes to researching, categorizing, and listing the services we are reviewing on this show. Check this out. All right, let's first talk about the Motley Fool. All right, now the Motley Fool is an excellent resource for people who want to develop a well-rounded stock portfolio, but not spend a ton of time getting down and dirty with advanced analytics. And the service offers a lot of free information, the website itself, including trending news, investing articles, a stock tracker, assistant finding a broker, retirement resources, podcast, and much more. So this is kind of cool. I mean, this is and it's free to join. You can even join their active CAPS, the CAPS community, where you can get advice on the best stock to buy and when to buy and which stocks to avoid. You can track your own portfolio, make trades, and compete with the market indices and pro investors. And also noteworthy are the Motley Fool's preferred stock tracking and comparison tools. And its flagship service, the Motley Fool Stock Advisor, is a premium subscription service that helps investors choose long-term growth stocks. And this service has a good track record and is a more affordable option than many other premium investment services you'll find on the internet. So for nearly $200 a year, you'll get 2 new stock picks per month, weekly advice about the best 10 timely buys for hot stock commodities, starter stock recommendations for newbies, 4 to 8 email newsletters per month with new recommendations, the latest stock news and their expert analysis, favorite and scorecard features, so you can keep track of stocks you're keeping an eye on. You have detailed tables, charts, and reports on the latest stock trends, specific industries to focus on, company information, and more. You also have highly active discussion boards, which include novice and seasoned investors who share a wide variety of advice. Fantastic. So I'm showing you right now on the screen, Stock Advisor. This is the Motley Fool's leading subscription service. Now, what are the pros and cons here? So the pros, it eliminates the need to keep a daily watch on how the market is performing if you follow their advice. New subscribers can see every Motley Fool stock pick going back to 2002 to help diversify their portfolio. You have access to expert closed stock recommendations, and there is an excellent community board. And this is only available to members though. You have access to premium reports, analysis, and articles, and you have a 30-day full refund for annual subscriptions. What are the cons here? You have lots of upselling with the Motley Fool. We've seen that. It's crazy. The upselling is crazy. You have the annual subscription auto renews. You have several customer complaints that they were charged even after canceling, and they are not for short-term investors. You got to have a long-term view here. What about the pricing here? The Motley Fool offers a 30-day money-back guarantee for all of its subscriptions. So Stock Advisor, $199 a year. Rule Your Retirement, $149 a year. And Rule Breakers, $299 a year. Let's talk about Seeking Alpha. Now, Seeking Alpha really is a great service. This is for advanced investors, and they offer a wealth of crowdsourced research content written by investment management experts. And most of the content is really geared towards an intermediate to advanced audience and includes in-depth analysis of individual holdings. And all of their writers are required to disclose information about their holdings or affiliations with companies. And the site is also an invaluable place to conduct company research. So basically what they do is Seeking Alpha publishes management conference called transcripts for many companies, and this transcript can give you insight into each company's prior quarterly performance and management's outlook for future performance. And Seeking Alpha really has both free and paid membership content. So the free version offers the latest stock news and analysis and portfolio management tools, but access to most in-depth articles and analysis is limited. However, Seeking Alpha Premium provides greater access to news and archived articles and news, as well as individual security recommendations. I'm talking here about alerts, charts, and comparison tools. So you have the whole 9 yards here. And Seeking Alpha Pro is also advertisement free and tailored for professional level investors. It provides access to exclusive investing ideas, charts, research tools, the ability to create on-demand ticker research for specific securities, and much more. What are the pros and cons here? So pros, you have excellent place to conduct company research. You have thousands of in-depth articles, good investment tools and features, and they have a 14-day free trial. The cons, the content may be too technical for beginning investors, really. The free content is more limited than competitors. Some users say the quality of authors is hit or miss, and some complaints that the site's overly moderates comments. And what about the pricing here? Seeking Alpha offers a 14-day free trial. I already said that for both its paid and so for both of its paid subscriptions, and they need a credit card though. So the basic is free, but the premium you have to pay around $240 per year or $29.99 a month, or for the Pro, it's $2,400 a year or $300 a month. Okay, and this is something you have to be very careful. You have to be mindful of. And I'm showing you right now. You can see the pricing model here on the screen for Seeking Alpha. Let's talk about Morningstar review. Now, Morningstar is a pretty interesting service also, and this is best for mutual funds and ETFs. And they are widely considered one of the best resources for fundamental investment research and stock data. And arguably, in our view, the leading source for mutual fund and exchange traded fund data. And its website presents information in easy to digest graphics, really. And the cool thing here is that Morningstar has a basic service. It's free and includes current and historical data, including financial statements and price data for individual companies, as well as a wide range of other performance statistics. And their premium service gives you access to in-depth analysis and widely respected ratings from over 150 Morningstar analysts, and the ability to screen stocks, mutual funds, and ETFs based on Morningstar's premium service. And one thing you also want to understand is that if you use their premium service, you will find it very easy to actually evaluate your investment picks, and also Morningstar's own top investment ideas based on your individual investing goals. What are the pros and cons here? The pros: it is competitively priced. They have a good reputation for reliable, in-depth expert advice. They are the industry leader for mutual fund and ETF research. There is a wide variety of tools and features. There is a good bit of free information, and they have a 14-day free trial. And for the cons, it's very difficult to cancel the free trial because they automatically start charging you once it's up, and some complaints about a glitchy interface. We've seen complaints that customer support is poor and slow to respond, and Morningstar is not really for short-term investors. In terms of pricing here, and one thing I want to say here is that pricing is pretty straightforward. So you have it's $30 a month, $199 for 1 year, $349 for 2 years, and $449 for 3 years. And they also have had, as I said earlier, they've had some issues around the fact that there are several complaints from customers who said that it is extremely difficult to cancel. Extremely difficult. So please keep that in mind. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Studio Kiwi Show. How are you? We are still having a conversation about Motley Fool versus Zacks versus Morningstar versus Seeking Alpha versus The Street. Zacks is for trading, and Zacks Investment Research provides independent research to give investors advice about buying stocks, mutual funds, and ETFs with a strong emphasis on gaining a trading advantage. This is really for traders. And their free services include stock news, research articles written by quantitative analysts, and stock and mutual fund screeners. But if you are a serious trader, you may want to opt for their premium membership to gain the ideal buying and trading advice. And Zacks Premium has a proprietary mutual fund ranking system that helps you in your decision to buy or sell. This is kind of cool, and it's very cool. And that system covers nearly 19,000 mutual funds, 19,000, which Zacks rates on a 1 to 5 scale. And a rating of 1, for example, is a strong buy recommendation, and a rating of 5 is a strong sell recommendation. And Zacks Premium also include Zacks number 1 rank list, premium stock screen that filter by value, growth, momentum, income, and more. They have their focus list. You have earnings ESP, so the expected surprise prediction filter, and an extensive equity research reports. What are the pros and cons here? Pros: it's best for traders. There is a wide variety of tools and features, and they have a strong historical performance for its ESP filter and number 1 rank. So the ESP feature again is the expected surprise prediction filter. This is the feature that finds stocks that Zacks analysts think will beat the Wall Street expectations. Good. This is great for short-term traders. And going on with the list of pros, you have 100% satisfaction guarantee. So you have a full refund within 90 days. And there is a 30-day free trial for premium subscription. What are the cons here? It is pricier than some competitors. This may be too technical for beginning investors. Some user complains that the free trial is difficult to cancel and it's difficult to unsubscribe to their daily emails. What about the pricing here? Let's just focus on the pricing. Zacks Premium has a 30-day free trial. Investor Collection and Ultimate have a 30-day trial for $1. So Premium, $249 a year. Investor Collection, $495 a year or $59 monthly. And the Ultimate is nearly $3,000 a year or $300 monthly. Let's now talk about the streets. And this is our honorable mention here. The street, I mean, if you are into investing, you're likely familiar with the co-founder and owner of the street, right? Jim Cramer on CNBC's Mad Money. I mean, we love this guy. We've been watching him for the last 20 years. And Cramer and his team offer a wide variety of free content and paid subscription options. So the street is really great for newbies to learn the basics of investing, as well as professional traders to get the most up-to-date investing news, all for free, really. But we really think that this website, thestreet.com, falls a bit short compared to similar sites like the Motley Fool and Morningstar for basic investing features like a portfolio manager and other offerings, really. So having said that, if you are a big Jim Cramer follower like we are, the street has some interesting options. And their most popular premium subscription is Action Alerts Plus. This is a stock picker and investing newsletter run by Cramer and his staff at the street. And so it's kind of similar to the Motley Fool's Stock Advisor subscription, although at a much heftier annual price. So it includes investing tips and education from Jim Cramer, exclusive access to the members-only monthly conference calls, real-time investment alerts every time Jim Cramer and his AAP team buy or sell, and you have 24/7 access to Jim Cramer's portfolio. And so the street also has 7 other subscription options for various interests, including stocks, bond, ETF. But we're not confident that the street gives you a better bang for your buck with those subscriptions compared to what you can find with our top picks in this video. So with the pros and cons here. So pros, you have a wide variety of advice for beginners and professionals alike. Free access to up-to-date news in Jim Cramer's blog and articles. You have a 30-day money-back guarantee, and there is a 14-day free trial. The cons, the site layout is overwhelming and confusing. Really, have you seen it? If you go to thestreet.com, it's just overwhelming and confusing. Some users say it's very difficult to cancel their free trial, and we have actually, in our research, we've seen several complaints about non-responsive customer support. What about the pricing? So the street offers a 14-day free trial for all of their subscription plans. So you have Action Alerts Plus at $300 a year, stocks under $10 at $200 a year, Trifecta stocks at $300 a year. We have top stocks at $500 a year, the street quant ratings, $49.95 a year, the real money, $149.95 a year, and the real money pro at around $800 a year. All right, folks. So here in our bonus, we have a bonus for you here. And we have actually, in the course of our research, we have actually come up with the best investment websites for news and advice. Whether or not you subscribe to a stock advisor service, you still need to do your own research. You still need to read. You still need to familiarize yourself with the industry you're in. You still need to know what's going on in the market, right? So be sure to check out these sites for the latest investing news and advice. So we have Barron's, we have Bloomberg, we have Yahoo Finance, we have The Economist, we have Kiplinger's, and we have Money. So Barron's digital and print magazine has been widely respected for years for its in-depth coverage of U.S. financial information, market development. We have relevant statistics, stock advice, and much more. And Barron's.com includes its own articles and articles from other top-notch investment sites like the Wall Street Journal, MarketWatch, and Dow Jones Newswires. And the introductory rate is $1 for 4 weeks if you're interested in that. And then you have Bloomberg. I mean, Bloomberg is well known, right? This is a well-known site for for extensive business, financial, and stock market news. The site has a lot of information about stock futures, sector performance, an economic calendar, and a watch list where you can actually build a portfolio to track your favorite companies and indexes and follow related breaking news. And Bloomberg gives you free access to 10 articles per month. We have Yahoo Finance. This is one of our favorites, by the way, and this should be one of your go-to sites rather for its industry and sector news, as well as company information. So the free version has a wealth of financial information, analyst estimates, message boards, and much more. It will cost you about $35 or $350 a year to get advanced analytics and detailed company profiles, but you can try out the premium membership with a 14-day free trial. You also have The Economist, and this is great if you are into economics and how the larger picture might change your smaller picture. It's a great choice. You have Kiplinger's. They've been around for forever. If you're looking for practical advice and information on what to do next, Kiplinger's Personal Finance is a great choice. And what we love is that this magazine has long been the top choice of investors and economy-minded individuals for personal finance topics. And Kiplinger is actually published every month, but its publishers also release a range of weekly newsletters on subjects from taxes to planning your retirement. And last but not the least, we have Money, and it's now available in only digital format. Money Magazine gives investors access to topics that include investing, saving, retirements, and taxes. It also offers practical tips on lifestyle topics like paying for college, credit, career, and home improvement. Fantastic. So, folks, the bottom line here is that final verdict, what's the best stock advisor? What's the winner here? Let me quickly sort of recap what we talked about before telling you our winner. So the Motley Fool gives you individual stock advice. They have their own experts who give investment advice and stock picks. It's great for beginners, but also well suited for intermediate and advanced investors. They have a better reputation for investment performance, excellent online forums where members can share a lot of useful tips and advice. Great. This is the Motley Fool. Zacks. I want you to remember that it's great for trading advice. It's suitable for seasoned investors. You have plenty of expert advice on mutual funds and ETFs. They have a mixed track record. Many customers say that Zacks can be more hit or miss than the Motley Fool, and the website is not easy to navigate. Seeking Alpha. This is a crowdsourced platform, really, with articles by independent authors, and many have investment management backgrounds, but their expertise and quality of advice varies pretty widely. And this is geared toward intermediate and advanced investors, and much of its content is far more technical and in-depth. And the Seeking Alpha allows members to comment on individual articles, but some users complain that Seeking Alpha overly moderates comments, especially when they disagree with an author's perspective. And last but not the least, we have Morningstar. So Morningstar here, you have mutual fund and exchange traded fund, right? This is when it comes to ETF, Morningstar is arguably stronger than its competitors. You have it is data heavy and geared toward experienced investors. They have long time solid reputations and good track records of outperforming the markets. And the website is very easy to navigate. So I'm showing you right now on the screen here. Please take a look. Here is our comparative analysis of the best stock advisors. So you can see the Motley Fool, our score is best for beginners, intermediate, and seasoned. Stronger research for stocks, customer service, price. So we're gonna leave this for a few seconds on the screen. You can see it. Morningstar, our score is a 9.5 over 10. Seeking Alpha, 9.5 over 10. Zacks, 9 over 10. And the Streets, 8.5 over 10. And I would say that all of them have excellent or good customer service except the Streets. And in terms of price value for money and their reputation and ROI track record. And we're leaving this on the screen again so you can see it. All right, folks, this is it. Our pick, as you would have imagined, is the Motley Fool. This is our pick, but again, at the end of the day, it depends on your situation, right? The best stock advisor for you, the best investment research service for you depends on your situation. Are you a long-term trader? Are you a long-term investor? Are you a swing trader? Are you a day trader? Are you more into quants? Are you looking for fundamental analysis? Are you looking for technical analysis? So those decisions, those needs will determine which service is better for you. At the end of the day, you, better than anybody else, knows what's good for you. But our pick, in our view, what we believe is the most complete service is the Motley Fool. Our score, 10 over 10. It is great for beginners, intermediates, and seasoned. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.